Hey everyone, welcome to a post-finals edition of the chat. Today's Tuesday, May 19th. Checking on the markets. S&P was down 0.7%. Nasdaq down 0.8%, and the Dow is down 0.6%. Brent oil remains elevated, $111 a barrel. As we've seen, it's a significant contributor to inflation as CPI came in hotter than expected at 3.8. And big headline news of the week, 10-year Treasury yield is at 4.67%. So that's just a quick kind of recap of the markets today. And yeah, so we have Terry, just Terry and me today. A few topics we want to cover. And yeah, I guess maybe quickly, Terry, I don't know if you want to recap the Trump China visit. I believe he brought a few of the CEOs from some of the larger tech companies over there. And yeah, I don't know if you have any updates on that, kind of how that went.
Yeah, so I mean the main things market wise, I think the most important company that joined was, Jensen was on, I think he was on Air Force One, joining with Trump for it. The main market movement there being that historically NVIDIA has not had access to sell their GPUs, which, obviously the NVIDIA stance has been we want to have free markets, let's open the markets up. The government mostly up to this point has been saying it's more of a national security risk if China has capacity to make higher order, agentic AI, have cybersecurity risks. We want to stay ahead. Whereas NVIDIA stance is, well, oh, if we're all competing and then NVIDIA will do better and we are an American company, we'll want to be better. So some would call it cozying a little bit to Trump, but it seems Trump is more supportive now. Nvidia was up most of last week, hit some all-time highs, but then on Friday things are looking a little less bullish at this point. It seems Beijing is they're not disagreeing with or they're Trump and Nvidia are more aligned at this point. Like Trump wants the sales to happen. It seems that China is not wanting, or at least the Chinese government is not wanting these sales to go through. So if they don't allow the Chinese companies to buy these, then it's kind of a wash. It's not going to help. So yeah, it's and that's just the Nvidia side. Also, obviously, we had Tesla in co, and it seems recently Trump, while publicly promoting a lot of these tech companies, is also making some investments in them. So there's a lot going on with the China trip, but it's very much a market mover.
Yeah, that was very interesting to see. Just to pull up a chart, 5 day of the Nasdaq, it's still a little bit lower than end of last week. So there's anticipation. I believe Nvidia reports this week. I don't remember if it's Wednesday or Thursday, but seems to be a little bit of a sell-off going into that. Yeah. Also, inflation fears are again top of mind in the market. This is it's funny. This is just a free website I found a month ago when we were talking about treasury curves, but we've seen this 10-year government yield move up over 4.5% in the past week or so. This red line is from January, just so you can see, 5-month trend.
Mm.
But even if you just go to last week, it's been a pretty big shift up. So um,
Oh wow.
uh, it's not great for borrowing costs, corporate borrowing costs, and then also, home ownership's usually based off of this 10-year yield. So it's the annualized rate of return on government bonds, and then typically for mortgage rates, I believe it's about like 300 basis point spread on top of that. So, um, I mean, you can back in a number. It's well over what 7.5% for a 30-year mortgage loan. It's pretty scary what's going on there. So, yeah, we could see definitely some continued elevated inflation here over the next few months. So yeah, as we can see here, what 3.8% we mentioned earlier is headline inflation. annualized, and that's a concern we talked about in previous weeks, and to see that realized, in the numbers, I think that's a little concerning. I don't know if you have any thoughts there, Terry.
No, yeah, similar thoughts. It is concerning. It's definitely a tough first 4 days for Kevin Warsh after being sworn in. So we'll see. I know the new Fed chair's goal is to lower rates, which would worsen inflation theoretically.
Hmm.
While also he's also trying to shrink the balance sheet, which, as we covered in macro, is not usually not something you can do both at the same time for. So, yeah, definitely an uphill battle for the Fed and for, you know, anybody borrowing at the moment. So, yeah, definitely not a bullish sign for the market. So that honestly, I think that's somewhat related to the downturn recently. If rates are going up this much, it's just not going to be good for stocks. But not much in
Yeah, we
addition to that.
talk a lot about NPV and just kind of free cash flows in our finance class, and yeah, that's very much directly affected by those borrowing rates there. I do want to touch on, let's see if this moves over here. Yeah, so there's been a big IPO recently. Cerebras, it is a chip manufacturer that's a direct competitor to NVIDIA. And it's not a company that I had heard of before the past few weeks. But from what I've heard, there's some rumblings about there may be some increased competition for NVIDIA's revenue stream coming down the line. And yeah, it's pretty incredible, the demand for the IPO book there. Sold off a little bit past few days, but yeah, I don't know if you've heard of this company before, Terry, or if you have any thoughts on this
Yeah,
compute space.
no, I don't have enough thought or enough knowledge to speak on it too deeply. My immediate thought is, you know, I don't want to talk badly about a company I don't know anything about, but I could see people seeing this as another opportunity to buy cheap on what could be the next Nvidia. Seeing what are we at, a 5 point something? We're well over 5 trillion market cap for Nvidia. So seeing
Hmm.
something in the hundreds of billions, it's, oh, this could 10x, right? If it's a true Nvidia competitor. But my thoughts are the CUDA moat and just the scale of Nvidia is it's an extremely hard um it's a hard thing to compete with. So I wouldn't be as bullish on Cerebras as I would be bearish on Nvidia if this does have legs and becomes a great second option. I don't see this as the next $5 trillion company. I just see it as, a path to Nvidia shrinking a little bit if it really is a disruptor.
Yeah. And then one thing that, we have here in our notes is there's an ongoing trial with Elon Musk and OpenAI. And, if I recall correctly, I believe they threw out Musk's, yeah, here we go. Let me just pull up just so our viewers can see here.
Yeah,
But
statute of limitations, right?
yeah, is that what it was?
Yeah,
Didn't have
it's too
time.
too old of a case essentially. So to kind of do a quick voiceover of the situation, it's that Elon Musk had donated maybe 32 million, I think was the number. He was an early donor into what was a nonprofit initiative for OpenAI. The idea of having an open source general AI system that would become, a public good. And obviously, we know the future after Altman and Brockman thinking, how can we become billionaires off of this? And not only did they become billionaires, and Brockman is the less known of the two, and it was 30 billion, I believe I was seeing was his net worth off of this. So this isn't small money they're talking about, but the case Elon is saying is that you've defrauded people by saying, hey, this is a nonprofit, this is the mission, and then you suddenly convert it into a for profit company, an extremely for profit company. And the jury unanimously said there wasn't standing because of the statute of limitations. So basically, Elon did not complain about this early enough, which I think a lot of the speculation or thoughts and reactions to this are, well, Altman may have won the current case, but Elon's to some winning the narrative of, oh, Sam Altman is a liar, cheater, turning a charity into a for-profit thing, stealing from would-be donors to make money off of them. I think this can kind of hurt XAI and OpenAI, honestly, if it's just, oh, they're in the middle of this legal nightmare and Sam Altman's a bad guy, Elon Musk isn't any better, and then meanwhile Gemini and Claude are just booming in usage. So that's sort of my read on the situation. And I think both XAI and OpenAI need to kind of improve to keep up more than figure it. Well, yeah, this is happening. Um, so that's my thoughts. I'm not sure if you had any on that.
Yeah, no, that sounds kind of like right on the ball here. And just to add a little bit more color, we've talked about Anthropic past few months, just kind of taking OpenAI's lunch and getting towards that $1 trillion valuation, which is it's almost incredible. Unicorns used to be so rare in the in the private company space, and now it's not $1 billion anymore; it's $1 trillion. So I wonder if that's the new unicorn status, or if there's going to be a new term for that. But yeah, Anthropic recently just raised at a $900 billion valuation. I believe it was last week, and it's yeah, it's just pretty interesting to see what's going on in this frontier lab space, and the growing competition, and SpaceX acquiring XAI, and um, from what I read, they're likely going to acquire Cursor after the IPO, which there was some more rumblings today that they chose Goldman Sachs. Can't remember either Goldman Sachs or Morgan Stanley, but they're essentially going to be using a lot of those investment banks to go public, and then likely acquire Cursor after launching. So yeah, it's a fierce competition out there in the frontier lab space. But yeah, that whole nonprofit, for profit, Sam Altman fired, Sam Altman's back a couple years ago was yeah, pretty big, crazy back then, and we're just kind of seeing the implications now, how that played out. Um, Lastly, I think, last thing I think we want to talk about was, you know, um, kind of the Vanguard business model. Terry, I believe there was Acquired podcast. They talked about, Vanguard, and I don't know if you want to go into more detail about that. I know you're a big Vanguard, Vanguard fan, I guess.
Yes, a boglehead, so to
Yes.
speak. Yes, so yeah, it came out recently. The Acquired podcast, I highly recommend it, generally speaking. The one downside of it is these guys do these wonderful economic history podcasts, essentially deep diving into these companies. But the downside is they're up to 4 hours long, or will be multiple episodes. For example, I think they have three separate 4 hour episodes on Google alone. So if you have 12 hours, commuting, something like that, and you want to listen, it is wonderful. I've gone through the majority of their portfolio of episodes. It's more like reading a book or listening to a book than it is listening to a quick podcast. Anyway, over the last couple of days, I did work through the Vanguard episode, and the title here says it. It's the communist capitalist who saved investors $1 trillion, and that I wouldn't call him a communist specifically, but that is Jack Bogle. The For those who don't have the time to listen to the full thing, though, I do recommend it. It essentially goes through the full history of Vanguard, and in short, Jack's earlier life, he was a successful money manager. At I should know the name of the fund. It's on Wellington, Welling something. And then in a very massive downturn in like the 60s or 70s, he started to question, we're actually profiting off of all these people just because we have a high AUM through our fees. and they're struggling and dying out there. They just lost 40% of their wealth, and we're this is business as usual for us. We're just scraping in their money when they need it more than ever. We should lower the expenses completely. We need to get rid of all these costs. We should run at cost. We shouldn't be a for-profit engine to make money off the backs of these people investing their hard-earned savings. And obviously, the shareholders in the room are like, "No, what are you talking about? You're a psycho communist." But and he had written about this stuff while he was at Princeton, like these some of these ideas in kind of incubating in his mind. And over time, he eventually it's a good story, but within the company, he was able to sort of seize the means of allocation, and started
Mhm.
Vanguard. Within it, the main thing was not about ETFs at first. Actually, he was not a big ETF guy. He just wanted the structure to be a private company that was not for profit. So the investors are the shareholders, and it's just running at cost. And so at first, you'd have high costs just to get things going. But once the AUM is high enough, and now it's in the trillions of dollars because it's simply just such a good deal with the low expenses, it's not it's non-meaningful the amount they charge. And by doing that, they have driven the price of the entire money management market down near zero. A direct savings of $1 trillion for Vanguard customers in expenses that they did not collect. But I would say even more than $1 trillion than that. BlackRock and others can't do the high expense ratios either. All of the different investment vehicles have dropped significantly, at least for public markets. The ETF wave kind of comes much later, actually, after he was ousted as CEO for being kind of too strict on some of these things. But yeah, he had a bit of a communist mindset, but this communist thought of, oh, how can we spread the wealth and not extract it from everyone has really saved many retail investors. And I don't have the exact Warren Buffett quote top of mind, but it's in there. And basically, Buffett just says that Jack Bogle is, one of the most important people in finance history and one of the, greatest gifts to investors in the world. And Buffett himself, though he was one of the few that could beat the market after fees when S&P tended to, nobody's really doing that over a long period of time other than him. He also would recommend, hey, just invest in, VU and forget it. And so I think it's a wonderful company, a wonderful story, definitely worth a listen. And it's not investment advice, but I think a VU 100% VU is one of the few things that I would ever say 100% is like semi-rational for. And even if you're picking stocks, I think a lot of people are on a barbell strategy, a VU basis, and then invest with the rest. So it's good stuff, worth the listen.
Yeah, definitely kind of, led to the rise of passive investing, 401ks, and like you said, lower fees. So, the name of the game is save money on that end. And yeah, we always talk about staying on the efficient frontier in academia within investing, and either hold some sort of balance between the market portfolio or the risk-free asset. And yeah, Vanguard definitely embodies that. It's funny enough, it says presented by JP Morgan. So be curious to see what those ads are like in the
Yeah, it's one of
podcast.
the sponsors of the podcast. Yeah, it's like JP Morgan Payments, I think is like the thing. They have a few sponsors in there, but yeah.
Yeah. Well, I think that's kind of all for this week, and that's a little bit shorter episode. We're kind of missing a few familiar faces. We had finals last week, so I think we're still kind of recovering from that, and yeah, hopefully Nvidia earnings come out and it's positive and keeps the momentum in the market, and hopefully everything going on with Iran and China and the trade wars gets settled from the U.S. side. That's definitely still very much front and center. I know the market's been going up and up and up past few months, but those are still very real concerns, and obviously, thoughts to everyone that's involved there. Yeah, any last thoughts or comments on your end?
No, the same worries as you, but it's summer, so we can, have some fun in between. There are smart people working on it, right? So it'll all be all right.
Yeah. And yeah, so that wraps up, I believe, episode 10. And see you guys next week. Have a good one.
See ya.